Hi everyone, welcome back to the channel, and today we are going to discuss about how money and markets actually work. So every day you hear terms like interest rates, stocks, crypto, bonds and forex reserves, but have you ever wondered how are all these connected? Today we are not just defining terms, we are building a complete story of how money flows through an economy. So let's get started. So first of all, let's see how how money and markets work. So this is the part one where money starts. So coming to the interest rates are the foundation. So everything in the financial system begins with interest rates. So interest rate is nothing but the cost of borrowing money. So if rates are high, the loans are expensive and spending decreases. If the rates are low, loans are cheap and spending increases. So, this directly impacts the business, consumers, investments, and economic growth. So, interest rates control how fast or slow money moves in the economy. So, next, let us go to the second thing that's all about interest rates. So now we have the CASA deposits or else the CASA deposits. These are like the fuel for banks. Banks need money to lend and they get it from deposits. So CASA is current account plus savings account. These are the low interest deposits, cheap source of funds for banks. And the higher the CASA ratio, lower cost for banks and high profit margins. So these CASA deposits are like the fuel for the banks. That's why we say it. So that's about the CASA. Next, we have something called as credit deposit growth. So this means how much banks are lending compared to how much they receive as deposits. Like high credit growth shows it's a strong economic activity, and too much lending shows that it's a risk of bad loans. So banks act like the middle engine, taking money from people and giving it back as loans. So this is the credit deposit group. Next we have DFS, that is role of digital financial services. So the Department of Financial Services regulates and supervises. So uh, it also supervises all the sectors like public sector banks, financial institutions, insurance companies, and it ensures stability, policy implementation, and financial inclusion. So now these are all about what the money, like where money starts. So now, um, as we saw how where the money starts, now let us get into the part two, that is where money goes, the investments part. Okay, so first, where the money goes, the investments, the first comes the assets and portfolio. So an asset is anything that holds value and can generate returns. Example, stocks, bonds, gold, real estate. A portfolio is mix of these assets. Okay, so smart investors don't put all money in one place. They diversify. They diversify their money into stocks, bonds, gold, real estate, and etc. Next, we have second investment as stocks and equity. So when you buy a stock, you own a part of a company. That is equity. Equity is equal to the ownership. So companies like NBCC allow investors to buy shares and participate in their growth. So returns come from price increase and dividends. Next, we have something called as bonds. So bonds are the safe investment. Like a bond is a loan given by investors to government and companies. So in return, we they get fixed interest and lower risk than stocks. So, but returns are also like it is safer, so the returns are also like lower compared to equity and stocks. So but bonds are generally like the safe investments, they tell it as. Next, we have something called as ETF, that is exchange trade funds. So it's a diversified investment. ETF, as I told you, is the exchange traded fund, and it is a basket of assets like stocks, bonds, commodities. And we get benefits like diversification will be there, the risk will be low, and there is easy to trade. So these are all the benefits of investing in a ETF. And then we have commodities. Commodities are real physical goods like gold, oil, agricultural products, and they are important because prices affect inflation and used in industries globally, as they are also used in industries globally. So these are about what is money part 1 and how the money, where the money goes, the investments, as part 2. Now let us enter to part 3, that is the global connection. Okay, so global connection for money is the first one is the Forex Reserves. So Forex Reserves are nothing but are foreign currencies held by a country. So example, US dollars, euro, and etc etc. So they help stabilize currency, pay for imports, and handle economic crisis. So these are all forex. So higher reserves is equal to stronger financial position of a country. Okay, next we have part 4. Now coming to the next part, that is the modern finance. Okay, till now we see where the money is, like where the money goes, and the global money, like the global connection for the money. And then we are now entering into the modern finance, that is part 4. So modern finance lies in crypto and Bitcoin. So cryptocurrency is a digital currency based on blockchain. Most famous is Bitcoins, as I know that you would heard the name, right? So key features of a Bitcoin is like it's decentralized, no central authority, highly volatile, and it's used for investment, transactions, speculations, and all. Next, we have institutional investors. So the roles of institutions come. So large firms like Fidelity Investments invest in stocks, bonds, crypto, and they influence markets because of huge capital. Okay, next, let us get into the part 5, the last part of the whole video, that is putting it all together to make you understand more better. So let's connect everything. So step by step, if we go, first is the interest rates decide the borrowing cost. Okay, so interest rates are important. Next, the banks use CASA deposits to lend money. Then we have the credit growth drives economic activity. And then we have investors put money into assets like stocks, bonds, ETFs, commodities. Next, we have government monitors through um, government monitors through DFS, Forex servers, Forex reserves, which stabilize global trade, and crypto adds a digital alternative. So whether you are investing in stocks, buying gold, or hearing about crypto, everything is a part of one interconnected financial system. So now coming to the key takeaway, understanding these concepts helps you make better investments, understand the economy, stay ahead financially, and now you don't just know the terms, you understand how money really flows. Okay, so if you have like understood anything, and if you like enjoyed this video, enjoyed the information, please do consider like, share and subscribe for more deep yet simple explanations. And if you have any questions, please do comment and let's discuss. So see you in the next video. Thank you and bye bye and happy living.